Welcome back to DataBytez, your number one source for data-driven content. And on today's video, we are continuing on with the topic of wealth, the one thing you need to read before investing a single dollar. Now, if you've been following, we already covered the core financial statements and financial ratios, but we never really spent a lot of time figuring out where do we actually get that information from. And that is where this document, this one special thing comes into play. Now, before we go into the details of this thing, a little note on investing. You can't invest without research. Research and investment go hand in hand. Failure to do research disqualifies you from being labeled as an investor. No, because without research, you are simply speculating, and speculation sinks success. See, whenever you speculate, you run the risk of losing it all. Now, some of you might be thinking, but you always risk your money when you're in the stock market. Now, this is true. I'm not going to sit here and say that you never have an underlying risk factor when you're investing in stocks. However, at all times, you must be either seeking to minimize the risk, your investment risk, or at least being aware of the risk you are involving yourself in. And that, again, can only be done through research. Now, a little bit, of speculation is okay. I think especially when you're picking individual stocks, you need a little bit of that gut feeling that you build, at your experience of investing. But speculation as an investment strategy spells disaster. If that's your strategy, is to only speculate, you'd be better off gambling. Now, when it comes to our research tool, the 10K is the ultimate research tool. You see, the 10K is a required following that tells you everything you need to know about a company. And a little bit before we go on the financial system itself and the importance of this form. So you see, in filings, we trust. Financial markets operate on the principles of trust and transparency. Investors and interested parties need confidence that the information that they are using is accurate and complete. Without trust and transparency, markets can't exist, at least not in the form we have them today. Now, the 10K plays a central role in these principles through legally mandated detailed disclosures. Required by any company who wants to be traded on the U.S. stock exchange, the 10K contains, everything you could really want to know about a company's position. Now, something important here as an endpoint of the filings we trust, good companies don't lie, but bad companies get creative. Now, don't get me wrong, companies lie. However, in the context of financial reporting, most do not. It's in their best interest not to. The consequences of fraudulent reporting can be quite severe. So it could be ranging from hefty fines or delisting from the stock exchange, which can basically evaporate any access to the equity markets, which can be detrimental to a publicly traded company that might be depending on those cash inflows to sustain operations. But getting a little bit too far deep there. But it's important to say that why is it the case like this? Well, it's because we, again, need to be able to trust the system. So while we can confidently say with 99.99999% certainty that the financial data is always reported accurately, it is not always presented accurately. You see, bad companies use creative accounting to hide losses and overstate gains. And there are ways to be mindful of it. It's never always set in stone because new ways are always found, I guess. But we will talk a little bit about what to look out for when we really dive into Graham's analysis framework on value investing. So I've talked a lot about 10K, blah, 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 saying it has everything. Well, let's get a more formal definition under our belt. So what is the 10K form filing? So here's the little thing I wrote out here. The 10K is an annual report that publicly traded companies in the U.S. are required to file with the Securities and Exchange Commission, or SEC. It provides a comprehensive overview of the company's business, financial performance, and risks. This is not a glossy investor brochure. The 10K is a formal and standardized document designed for transparency and detailed analysis. So everything in the 10K is presented to you in two big ways. It is, and you can kind of gather that from the definition here. One is a detailed overview of the company's business structure, model forecast, and guidance for management. These are the things that is one big component to the 10K in understanding a business. And then comes what we've been talking about, financial statements. And not only that, a set of audited financial statements. So now we can start applying those analysis techniques that were introduced from financial ratios and understanding what those financial statements are practically in developing our investment strategies, our investment analysis. So let's talk a little bit about the 10K structure, because like we mentioned here, it's a standardized report. And by standardized, it must adhere to a certain structure. So the 10K is generally divided into several key sections. The business overview, which this section describes the company's operations, products, services, and markets. Risk factors. It outlines potential risks that could impact the company's performance. Selected financial data. So this is a high-level summary of financial results over the past few years. Companies are going to pick the metrics that usually best show them in the best light. And so that's what they're picking. They're going to show you the best thing. And then we have management's discussion and analysis. This provides insights from management on financial results and strategic direction. Then there's audited financial statements, detailed audited financial statements, such as the, income statement, cash flows, balance sheet, and owner's equity that we've talked about before. And then finally, supplementary data, which includes notes and the auditor's report. So notes usually provide context, potentially to some information that being presented in the rest of the 10K, kind of like footnotes. So we've already talked about it before, but again, the core financial statements, as a quick reminder, is the balance sheet, the snapshot of the company's assets, the income statement, the profitability of a company over time, the cash flow statement, the detailed cash inflows and outflows, providing insights into liquidity and operational efficiency, and the statement of shareholders' equity, tracking changes in equity over time, including things like retained earnings and stock issuances. Now, we've talked about this more in depth in a previous video. Go watch that. Maybe it'll be somewhere on the screen if I remember. But this very crucial information is in the 10K. So I hope I can at least establish in this video that you need the 10K, because we've already talked about how important financial statements are. And this is the only place you can get financial statements, along with understanding the business. You need to understand what you're investing in. So if you have no idea how the business you're investing or potentially investing in knows how they make money, what their market looks like, understanding, what they foresee the business going like. Do they see it going up? Do they see it going down? Sometimes companies got to be real that they're facing problems, and that's part of their guidance. And they're saying, like, how are we going to address these problems? How are we going to overcome that? All of that is found in the 10K. Forget the news. Everything that you need to know, when at least in the context of investing, comes in the 10K. And the thing is, you have to read more than one, because you cannot use certain financial ratios for analysis, or you can't really see the trends in the company to see if management is giving guidance that is matching performance outcomes. You need to read multiple, and then you need the values of multiple years of financial data. So it's important to read more than one. Now, stay tuned, because not only will I show you how to find filings for publicly traded companies. So I've been talking about this, and these are legally mandated. So I'm going to show you where to find them for any publicly traded company listed in a major U.S. stock exchange. But then I'm going to show you how to actually use the information to pick stocks like a billionaire. Yes, that is true. I will show you how to pick stocks like a billionaire. Now, how can I back up this bold claim? Well, it's the strategy that Warren Buffett himself used from his own teacher. It's the bedrock of his success. Now, he did change it a little bit, and we will eventually cover that as I read through that book and his preference of financial analysis. But this was his bedrock, and it's value investing, and it still makes sense today. I would still wholeheartedly recommend it. So you might see the links to those videos somewhere potentially at the end here. If not, just stay tuned, hit that like button, subscribe, whatever, do the thing. Until next time, have a great day. It's been Patrick from DataBytez, and stay data driven. Bye.